So sort of the big picture for rails is that it's better in 2017. A lot of the metrics look a lot better, whether it be volume, coal, really across the board. Speeds are higher, although they're slowing down a bit. So the metrics are largely better. And let me just get this open. There we go. And then that's typically, in our framework, when we would look to sell. So we added Norfolk Southern to Best Ideas as a long in September or late fourth quarter of 2015, expecting the environment to improve. The environment's improved, and it typically would sell. KSU is an outlier, and we'll be talking a lot about why it's an outlier today. CapEx is down. There's lots of cost savings in the longer run there. And then we've also been looking for longs. We'll talk a little bit about the policy environment for the broader industrial sector at the beginning, and why that policy clarity is likely to help certain players more than others. So, some, I think, as the focus shifts back to earnings, some companies will suffer from the focus shifting back to earnings, and some will benefit from it. So for KSU, we think that the policy discount is in some ways unwarranted, that when we actually look at the policies that are going to change, an easier regulatory environment from both an antitrust and rail perspective is probably helpful. And we'll look at some of the ways in which a border tax adjustment may not have the kind of extreme effect that I think some market participants are concerned about. Obviously, there are risks of a trade war, concession being taken away, but if, as we were listing the risks to a different presentation, our defense policy analyst was like, well, a meteor could hit the Earth. If there's like a revolution in Mexico and that kind of thing, then obviously that would be bad. It doesn't seem to be on the table at the moment. Meteor hitting the Earth also a negative. Energy reform in Mexico, some other reforms there are probably likely positive for KSU. And finally, there's just a bunch of visible growth platforms, whether it be just penetration into trucking, the impact of energy reform, increased fracking and drilling activity off of Mexico. There's a number of ways. Growth in petrochemical investments, obviously one of the biggest, and ports and terminal investments just give this railroad, unlike the rest of the railroad industry pretty much, some really visible, solid growth opportunities. Finally, we'll go through why KSU usually trades at a premium. So realistically, it is at a premium because it's always been the target of M&A speculation. And for the first time, we've actually seen the potential for an accretive acquisition, which is one of the reasons we're actually doing this deck today, as we'll go through in a second. We have a relatively new management team, some very important changes there. Usually a new management team will set beatable expectations. In this case, I think some of the expectations currently are high in the street. That is an issue that we have to overcome, particularly in 2018. But the upshot is that KSU is cheaper than usual. It's heading into a period of pretty robust growth. On their list, we have the quote where they talk about the irony of reporting on Inauguration Day. We show that if your portfolio was like, a lot of stuff is neutral and a whole bunch of stuff is positive, you'd feel pretty good about your portfolio. And I think that's the KSU portfolio setup right now. But basically, KSU is a name that really should trade at a premium. They can take price, they get volume growth, and they should have an M&A premium.